The Clearbridge Large Cap Growth Strategy is a concentrated strategy, so we typically have 40 to 50 names, and it's a low turnover approach. So we think of ourselves as owners of businesses, and I think when you're thinking out several years in terms of whether I'd like to buy this stock or not, you ask yourself different questions. You ask yourself questions about how durable is this business, what are the moats around the business, and is this really a good quality business that I think fits in the strategy for a longer period of time. The core of the portfolio, more than half, is what we call our stable growth bucket. And those are good quality companies that we think can generate steady compounding earnings growth over a multi-year period. But then we also want to have some companies that are secular growth companies. They tend to have a little higher volatility, but they absolutely contribute to the portfolio, and we want them to be part of the portfolio. And lastly, we like to have some cyclical growth companies that may have earnings growth right now that's depressed, but for which over a longer period of time we see significant upside to earnings and to stock prices. We fundamentally don't believe that we have to own anything at any price. We like to separate the discussion of, is this a good business model? Does this have the characteristics of something that we're looking for the strategy? From the discussion of, at what price do I want to buy the stock, where I see significant upside potential versus downside risk. So that's one way that I think we tend to be a little bit different. And the other way is that we do tend to diversify across those three buckets of growth in our strategy, which I think helps us have more consistent returns over time.